Hello dear traders, I'm Maria Starodupa and this is the review of crypto analytics from fx.co. It's the 31st of January, today Wednesday, and as we know, Bitcoin started this trading week on an optimistic note, and today we will discuss whether it keeps rising and how yesterday's and today's macro data affected and will affect its movement. And we have an article today by Artem Petrenko. Bitcoin optimistically started the new trading week, recovering above 42,000 by the end of Monday, and continued its upward movement. And yesterday, it experienced a bullish breakthrough of the 43,000 resistance level, indicating significant bullish sentiment in the crypto market. And the recent bullish momentum has largely been possible due to the absence of important macroeconomic and other factors influencing crypto market. However, the last 2 days of January, yesterday and today, promised to bring a substantial amount of crucial macroeconomic data to financial markets, directly impacting the quotes of investment assets. In anticipation of the scheduled Fed's meeting, which is due today, investors analyzed information on the labor market and the number of new job openings in the United States. And that was yesterday, and also yesterday a report on consumer confidence levels was published, which would potentially cause volatility in investment market and lead to powerful price movements. Some more about fundamentals. Following the rise in inflation levels in December, investors realized that a swift transition to monetary policy easing is not anticipated. Therefore, financial markets are trying to assess what to expect from Fed Chairman Jerome Powell's rhetoric today at the press conference. Labor market data and the number of new job openings can shed light on this question, providing insights into the state of the US economy, making them crucial for investors. So yesterday, it was already published the data from the Bureau of Labor Statistics, which allowed investors to evaluate the outlook for changes in the U.S. labor market by the end of January. The forecast indicates that in January, the U.S. economy included 8.73 million active job vacancies compared to 8.79 million in December. And if the data confirms this, an increase in the unemployment rate in January to 3.8% from initial 3.7% can be expected, signaling the need to stimulate the U.S. economy. Also yesterday, a report on the Consumer Confidence Index was published, acting as a leading indicator, pointing to the likely inflation level in January. Forecasted data suggested a probability of an increase in the Consumer Confidence Index in January to 114.2 points compared to 110.7 points in December. In such a scenario, the US dollar index will receive support and crypto assets will begin to decline amid the likelihood of a more stringent stance from Powell's speech. Overall, investors remain in a nervous state of uncertainty because there is no basis to believe that monetary policy easing could begin as early as March. Moreover, there are some reasons to believe that with sustained growth in key indicators, including the inflation rate, another interest rate hike is possible. And if yesterday's data confirmed concerns about the likely inflation increase in January, Powell may announce that the Fed is considering another rate increase this year. As for technical analysis, let's have a look at the chart. So despite potential challenges, Bitcoin continues its upward movement, completely nullifying the structure of the local downward trend. This is information of yesterday. The primary target for the asset is 45,000 level, where the 0.618 Fibonacci retracement is located, marking the end of the cryptocurrency's corrective movement within the medium downward trend. If Bitcoin consolidates above $45,000 and continue its upward movement beyond 46,000, an update of the local high is expected. And as of yesterday, Bitcoin confidently approached this target, achieving a bullish breakthrough of the 43,000 level, with daily trading volumes around $22.6 billion. And active purchases are gradually resuming, including those from giants like BlackRock, which has increased its total Bitcoin reserves to 52,025 Bitcoin. Moreover, increasing evidence suggests that the decline in the Bitcoin price was triggered by Grayscale, whose total balances fell from 620,000 to 502,000 Bitcoin. And as of yesterday, Bitcoin has closely approached the 0.5 Fibonacci level near the 43,400 mark. And the asset is likely anticipating consolidation or a decline here, depending on the market's reaction to fundamentals. A final reversal in the Bitcoin price and the completion of the upward correction are also possible at this point. If the price starts to decline and breaks the 42,600 level, the cryptocurrency will continue to fall to 40,000 level. With a successful consolidation and further break above 43,400, the likelihood of establishing itself above $45,000 will significantly increase. So, making a conclusion, Artem says that Bitcoin continues its upward movement, which may be either strengthened or completely broken by the fundamental data in these 2 days. Expect increased volatility and powerful price movements. And today's Fed meeting is one of the most anticipated and important events, and at the same time unpredictable events. And the macro data, which was published yesterday, is also of great importance to investors. Okay, let's have a look at the chart of Bitcoin for the moment. It's the 31st of January, and Bitcoin opened today at the point 43,021, and now it is trading at 42,959. So we can see that high volatility yesterday in the second half of the day, in the end of the day. It decreased, though not so significantly. It lost about 600 points from yesterday's highs. And we can see that the situation is still not clear because it hasn't broken through the important 42,600 level to continue its fall towards 40. At the same time, it doesn't move to $45,000 either. It's somewhere in the middle, and probably the asset is waiting for the Fed's meeting today, so we should be very much attentive and follow the news. Well, this is all for today. We will see each other in our next review. I wish you to have a nice day and profitable trading, and see you next time. Goodbye.